the OHLC or the OLHC to your benefit and to improve your trading accuracy and just consistency with a system, applying the same system every day. So the OHLC is the open high of a bearish candle and the low and close of a bearish candle, versus the OLHC is the open low and high and close of a bearish candle. Understanding the difference and how it fits together is very important in trading. So fractal on all candles, this means that the OHLC, both of them, appear on all time frames. So the weekly, the monthly, the daily, the H4, the 1 hour, the 1 minute, all time frames have the same method of opening high if a bearish or opening low if a bullish. Now, how it's beneficial, or why I should say it's beneficial to know this, is because smart money actually position themselves below the open with their positions on a bullish position, or if we're short, they are opening above the high, or their positions are above the high of the bearish candle. So if we know we're going into a day expecting one side of direction, which you should do, you shouldn't go into any day changing your mind mid-session. You should already have a fixed plan. And if you do have the fixed plan, you'll know whether you want to see a bearish or bullish day form. Let's say you want to see a bearish day form, you would wait for the candles open, which is again time based. So each candle open is time based. So if you know you're trading the daily open, you know that opens at either 12 GMT or 12 New York, which is like 5 a.m. GMT. So that's the open, and from this open you'd be able to mark price out, and you would know that any manipulation that happens above that is where you actually want to get into price. Same goes for the bullish candle. If you're expecting the day to be bullish, you would wait for the daily open, you would mark that out, and then you would wait for price. After accumulating, you would wait for price to manipulate below the low of that candle, and that is where you would look to find your entry pattern or your entry. Well, the best, highest probability smart money entry. So the distribution phase in the accumulation, manipulation, and distribution is in the second half of the candle majority of the time. So there's two halves to every candle. Mathematically speaking, you can split a day of 12 hours into two 6-hour periods. Or let's say you're looking at a H4 candle, that can be split into two periods of 2 hours. Or if you was looking at a H1 candle, this could be 30 minutes and this could be 30 minutes. If you was looking at a 1 minute candle, this would be 30 seconds and this would be 30 seconds. A tip, you want to be more so entering in the distribution, which is the second half of the candle majority of the time. So I would advise you to go and backtest this so you can have your own conviction and confidence when using this concept. What everything I've said here stands strong by itself, and it could be a model in itself. And I have traded this before as a model on its own, and it was quite consistent and it worked. But when I integrated this same methodology of thinking alongside the rest of my rule-based system, that's when I really started to see some consistency in my entries. Okay, so here's an example where we have a daily candle closing bullish, and I want to go in here and show you how the method would work. This is what you want to do as well when you're learning something new or you're testing something out. You need to go back on the charts and apply it and reverse engineer it, right? So we have a bullish candle that's formed in a higher low position from, let's look, so high, 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 low, high, high, high low, high high. That's what we're looking for in price on the higher time frame. So we go to the lower time frames and we look for price to align with that. So let's go straight to the 15-minute, right? So some of the things we spoke about here, right? So what we're looking for is fractal on all candles. Let's give that a tick because we are looking for a daily higher high to be printed, which means we want to see an open low, high and close, right? So we know which one we want to see. We want to see an open low, high and close. Are we on side with smart money? So that means, are we below the open? Because we're looking so long, we want to be below the open, right? I've marked the open here. Let's make it like orange so it sticks out. Any entry below here is high probability because above here is where the expansion takes place. We will be in before the expansion takes place, which is what is the higher probability. Timing the market. We've got the open at 5 a.m. for GMT, and that says 4 a.m. because the clocks went back. But yeah, and okay, so now time in the market, we can see we have the 5 a.m. open. It says 4 a.m. because the clocks went forward +1. And we have the 2 halves of the day. So let's say London session. This is how I used to annotate it out just to make it clear to myself. Till there was red. We're not looking to enter in this. This is when we're looking to see accumulation and manipulation opposing the direction we're looking for. So going the opposite way, which is going lower in this case. Tip. And then the second half of the day, where we look for the expansion of the candle in New York session onwards. So this little annotation just is a visual representation of us being on the right side of the market or not, right, at the right time. So let's say that's the break of structure, break of market structure, and then we've got, let's say that's the break of market structure, and then this would be our entry. Stop loss there at the low, take profit at the daily open or above, in this case, seen as price is already quite far below it. Here we tick all the boxes and the trade hits our take profit. I will then go and reverse engineer this another 10 times and make a few case studies around this. Now, to everybody that actually stayed and watched the video to the end, thank you, I appreciate it a lot. If you will leave a comment just letting me know that you've actually seen this portion of the video and you've managed to get this indicator. So I've been trading for a few years now, and as a trader, there's a few things that most traders, they don't like to share a lot of things that go on behind the scenes. And this indicator here is one of the indicators that makes visualizing the open high or the open low of a candle a lot easier. So the name of it is, this is the name, and this is who made it, right? This is so helpful because, you know, if you see your setup, again, we've got sell stops that were swept, disrespecting this gap, which shows a change in state of delivery. We've got a retracement trade during New York session. This would have been a nice long, which is all below the open of, what candle is this? This is a 4-hour candle. So like I said, you can set it to 4 hours, you can set it to any time, 1 day, and then refresh it. It now goes to the daily open, and you can calibrate it to any candle that you're trying to be below. Or, but yeah, so thank you for watching the video, and yeah, leave a comment if you got the indicator.